All right. Well, I appreciate you giving me some time. DXC is a global consulting firm. You've heard a little bit about us. Many of you probably still are not aware of is that we actually own a core banking system called Hogan. And so we are very involved in financial services around the globe, not just managing infrastructure, as you may be aware, but we also manage the actual core of the bank. It is one of the best kept secrets around the globe that we have this asset called Hogan. Hogan, maybe, here we go. Hogan is a GSIB class core that is behind some of the biggest names in the bank. And I say all this to give you some backdrop to how we view what's going on in the industry, because we hear from our clients on a daily basis what they're trying to do with their legacy infrastructure, trying to modernize, however they want to define modernization. And so they're constantly faced with competition from the neobanks, the challenger banks, as we've been discussing so far today. And we find that there are some truths about this gap between those two. So many of you have already discussed this today. We've heard the other panelists and moderators and presenters talk about these same subjects and make these same observations. The reality is there's a huge gap in perception between a fintech and the legacy institution. And what that results in is a huge disparity in valuations. So our friends at Revolut, as you know, are doing quite well because they've done exactly what Hadi said. They've focused on user experience. They've taken advantage of the lack of movement from traditional institutions, and they're being rewarded for it because they're growing. But it's a big difference going from, say, being a social media platform who has millions of users, stickiness, great brand identity, and then becoming a fully licensed financial institution. So you hear about a lot of fintechs trying to make that change. It's a lot more difficult than we often realize. So we have taken the position that most fintechs ultimately need to have access to the legal regulated source of funds. So whether you are a Ripple or other Kraken or Coinbase, you're probably not a fully licensed banking institution. And at some point, if you're dealing in crypto, you still have to execute on-ramp and off-ramp from a licensed institution. So there's still a need to partner and do things together and do so more efficiently. So what's the reality? For legacy financial institutions, negative perception, you're heavily regulated, you're extremely complex when you look at your infrastructure, and it's very challenging to make any changes. I mean, we can think about all the banks who have made announcements over the last 10, 15, 20 years to migrate from one core system to another. More often than not, those migrations end up failing. Or as Delissa pointed out and others, they end up taking twice as long and costing twice as much when you embark on that journey. And the reality is a lot of the things about core systems aren't actually broken. The core systems that most banks have in place are actually doing what they're supposed to be doing, keeping your money secure and managing the debits and credits. But it's all the other stuff that happens around the bank that they're failing to take advantage of. So fintech competitors, what's the reality there? Again, they have little or no tech debt. They are non-regulated. And they have the flexibility to go out, and I will say use the term extort. They can take advantage of other licensing mechanisms, money transmission licenses, or like an EMI license here in Europe, for example. you see them getting around the actual banking by being able to move money through partner organizations or non-banking licenses. But they still, at some point, have to get to a, a regulated source of funds. Apologies for my voice. So how do you get there? When I say invest, I don't mean CapEx. There are actually much more efficient ways to get across that gap. But you got to innovate. You have to have an open-minded. I know Lawrence was talking about culture. Culture is extremely important. You have to be willing to take risks. Most of the clients that we talk to, unfortunately, are ultra-conservative, and they're not willing to invest in a startup portfolio as ABN AMRO is doing. We also want to create a cooperative model or a competition type model. You've heard that term this morning. So where can we actually create a bridge between those fintechs who are creating superior user experiences and creating value with other products with the actual regulated source of funds? Seems like it's probably a pretty big opportunity. And we take the long-term value that is that source of funds, that legal regulated source of funds, with an established compliance regime that's going to be the foundation for everything. So we want to close that gap between legacy institutions and fintech competitors. So Hogan, again, just recapping, Hogan has been around since 1980, give or take. We have about $5 trillion in deposits sitting on our institutions. We once upon a time had hundreds of banks, but through consolidation, that number has come down to 40 banks, but accounts for over 300 million demand deposit accounts. Over 300 million cards are processed through Hogan. And we also do about $2.5 to $3 trillion a day in debits and credits across our clients. So it's a pretty sizable platform that we have purview to. Now, jumping ahead to 2025, we realized we had not been doing a good job as a company investing in Hogan and keeping it up to date. We realized that we needed to come up with a new plan, and we needed to come up with a set of investments that are going to address where our clients are looking. Pardon me. So we know that the next-gen banking system's got to be composable. It's got to be intelligent, and it's got to be real-time. So we developed three, as we call them, pillars to our next-gen system. One is an operating system we call Core Ignite, and then we've developed Hogan AI to be very specific AI enablement for core banking systems. And then Hogan X, which is our real-time light core. Light core being a light ledger, but an intelligent light ledger, not just a simple debit and credit ledger. Big deal. A lot of people have that. But you have to be able to extrapolate all of the business rules that you've created over decades into that layer. And then what that does is open up the things that we want to talk about today. I think later in the session we're going to talk about digital assets. How are we enabling AI? And how are we enabling agentic banking? A bunch of us have talked about that today. So what is Core Ignite, this operating system? Well, on one side, as I mentioned, we have all of these banks with all of these accounts. They all have a common problem. Speed the market, new product development, modernizing their core, new offerings in general. How do I do my SDLC faster and smarter with fewer errors? So we developed Core Ignite, and think of it, Core Ignite as an operating system, much like you would think of Android or iOS, or Windows or Mac OS. And on the other side, you have a marketplace of fintech partners who ultimately need access back to the source of funds. So this is a very important connection that we are making with CoreIgnite to facilitate the partnership and basically play the arbitrage that exists between fintechs, who are doing a great job of creating value, and the legacy firms who can't move fast enough and can't afford to make big changes. So I've heard a couple of other comments, and people have talked about approaches on how you do this, how you actually execute this arbitrage. So what we've done with our operating system is pre-integrated numerous partners already into the system, where we now have a very controlled, orchestrated connection directly into the bank core. Not just using an ESB, your enterprise service bus, or an API layer. A lot of clients probably use Apache Ignite or ZDIH, some other IBM product. What we're doing is actually making the connection directly into the core, so that if my bank client wants to create a stable coin or a tokenized deposit, they just click a button inside their app or on their portal. And then the next thing we know, you have a complete solution because it's already pre-integrated. The debit has already happened in real time on the core, and the digital asset now shows up in the bank account. Oh, and I'm sorry. We also make sure that we include real-time data, because as many of you referred to as well today, you have to be able to feed your AI applications in real time, or your fraud and AML. You have to be able to manage a directory of all of your wallets, etc. So all of this is baked in with a real-time data plane. And then at the user experience, we've thought all the way through on that, excuse me, so that much like you think of going into the Google Play Store or the Apple App Store or going into your Windows Marketplace, you now have the ability to, as a tech administrator in your organization, to actually go in and say, I want to enable digital assets from this provider or that provider. And then control all of the settings, all of the security settings, create safe spaces within your core system that are unique to you, all the while maintaining your data BAU, no data leaving your environment. Now, to do all of this, you've got to think about what are the most relevant areas that we have to focus on. So if we think about AI and we think about digital assets, and we think about real-time posting, what are the core elements that we've got to focus on to make that jump? So in your current state, you face challenges with your current infrastructure, your budget, your people capacity, skills, continuation of knowledge within your environment. In your target state, you want flexibility, quick time to market, capital efficiency, etc., and your operational efficiency. So if I'm going to draw out at least three things that we need, they would be these. Real-time posting and data, meaning I can't be relying on batch processes in my DDA to run my risk models, to do my underwriting in a real-time world. I have to be able to mark the market for treasury risk management. I have to be able to mark assets for underwriting, say for a new mortgage, etc. Now, AI. I specifically said trusted AI output. Many of you have alluded to this as well. AI is great. It's a revolution going on, but I think that you would also agree that who's watching the AI? Like, who's actually checking the output of the AI? What AI misses a lot, particularly in the core banking system, is context. It may be able to decompose code and run through some LLMs, but we find with our customers, the LLMs cannot satisfy the rationalization of custom apps that have been created over the last 30, 40 years. you're missing a lot of that valuable context. And so we focus on small language models, and I'll talk more about that. And then digital asset convergence. I have come to believe that I don't know that I'll see any government let go of their control of fiat. We probably will have CBDCs or some form of, government-issued central bank coins at some point. But there has to be an overlap between the existing regime, which will take years to catch up with the technology, which means you've got to always go from fiat to your token, or token back to fiat. So you have to be able to account for that. So this is the way we would start by approaching creating that bridge. So again, just quick summary. The path to real time, one of those fundamental building blocks, is that you probably don't have real-time data across your entire organization now as it is. You have pockets of real-time data, but a lot of our customers struggle with multiple platforms and only some of the platforms being processed in real time. Liquidity risk exposure, particularly when you're talking about wealth management, trading, and underwriting, is a big problem when your source account, your regulated source account, is running risk models based on batch processes. In other words, it's a treasury account, and the risk model can't really be updated effectively until after the batch runs all of the reconciliations once a day, maybe twice a day. How do you account for that? Well, that's what we're focused on. This isn't a sales pitch, but it's meant to be an example of how we are bridging by focusing on some of the most fundamental problems of getting to a real-time environment. And the results end up being real-time posting, should be an obvious one, but built-in AI features to not only just run agentic banking with simple prompts, but to actually help you code new functions within workspaces. So, AI. AI was another one of those building blocks. So what we've focused on as we've built out what we call Hogan AI is the fact that a lot of institutions have tribal knowledge. You have a very few people within the organization who actually know the software and know the applications. A lot of those people, particularly in clients that are running heavy mainframe systems, young people don't generally know COBOL, and that is a big problem. This is a very persistent story that we hear from our clients. Slow time to market, don't have to go over that one, and AI constraints. Yes, our friends at IBM would tell us that it shouldn't be a problem, but while their machine may facilitate AI applications, that doesn't mean it's easy to implement at the bank. So Hogan AI seeks to solve some of these things by institutionalizing knowledge, meaning we go in and decompose the existing environment, but then facilitate the dynamic updates of that blueprint on an ongoing basis. So we're actually making the institution smarter. And that relieves the talent continuity problem. And it also accelerates development. And it creates the opportunity to actually do AI banking. So again, trying to summarize this, and again, apologies for my voice. Core posting, transaction management, resilience, all supported by real-time posting. And then rule execution, governance and compliance, that's a biggie. And operations and AI, or things that we try to attack and focus on with our AI solution. So our approach, we have to look at the current environment, make sure that the current environment can actually facilitate real time. Second, probably the easiest thing and most cost-effective thing to do is deploy a light core on top of your existing system. Far more economical and far more scalable. And again, your core system isn't broken. It's trustworthy. It just needs a little horsepower. So the outcomes of taking this approach in general are higher performance, auto-reconciliation, accelerated product delivery, and built-in AI. And we're going to talk a little bit more about AI. But getting to what we're trying to talk about today, tokenized deposits, again, trying to figure out how do we take some of these key initiatives at banks around AI, digital, and real time. You have to think about what stage you are as an organization along the way to digital. Now, this is a question I don't hear much when we have these kinds of conferences, is the maturity level and sophistication level of the organization. Where are they in kind of reviewing and understanding what their internal capabilities are and what their longer-term strategic objectives are? So there are multiple stages to be thinking through as you think about partnerships, doing it on your own, etc. And how are you going to do that from a technical perspective, not just a skills perspective or a strategic perspective? And now, those are the kind of stages of where you are as an organization, but you have to overlay that with the commercial imperatives. Are you talking about your retail clients? Are you talking about your commercial clients? Is this a FOMO, fear of missing out initiative, because you feel that SoFi, Chime, Revolut, Monzo, or whoever it might be, are taking your clients? Is it a defensive mood? You just have to do it. Are you going after or following your clients? Maybe you have a bunch of commercial clients doing cross-border payments. That's where you need to focus on, because that's a different connection, different set of considerations that you need to make when enabling digital assets for a commercial customer as opposed to retail. So the way we've approached it is we've thought about what are the actual systems that are being touched, who are we trying to connect to, and how are we going to do that? So the way that we do that is by focusing on workflows and simplifying the connections. Some institutions are very proud. They think, well, I've got a great API layer, I've got great engineers. I don't care about creating point-to-point-to-point-to-point-to-point connections with all of these partners. We've taken it and simplified it through Core Ignite so that the institution does one connection in the Core Ignite and works those exact same flows to multiple partners. So I've heard a few people talk today about how do I run a pilot? How do I run it and measure it with success? What are my criterion for success? Now what we're imagining in the way that we've built this out is the ability to do A/B testing, sign up multiple partners from the same service. Maybe you want to do some transactions for, say, buy now, pay later with one provider and a certain other set of transactions with another provider, or digital assets. Maybe I want to tokenize my deposits with this issuer processor. Maybe I want to do wealth management with this one. This gives you the optionality without you having to embark on doing all those point-to-point connections yourself. So at the end of the day, we've thought this all the way through, not just the piping, but the dashboards for the technical administrators in the bank, and also all the way out to, say, in this case, a retail bank experience where I've logged into my app, and now I've got, next to my checking account, the ability to buy digital assets or to mint my euros into Eurocoin or USDC, whatever the case may be, as a fully integrated bank experience. We are actually going live with everything that I've told you about. We're going to be making an announcement and doing demos at our Investor Day on June 11th. So next week I'll be in New York going through all of this. And then going live with it this month. I forgot, it's already June. So we'll be introducing all three of these functions this month. This is real. This is what's happening in the industry. It's our experience. But I think I've heard today from a number of you bits and pieces of this. So I'm very heartened in that. I feel like we're not off base. So that's great. But that's what I wanted to share with you today. Hopefully it was a little bit enlightening and you know a little bit more about us and how we're viewing the future. But we see legacy infrastructure as a strength that can be leveraged. You just have to think about it a little bit differently. Thank you. Questions? No questions? All right.